This is Horizons Middle East and Africa. Our top stories today. Top US diplomats are in the Middle East trying to secure a pause in fighting just days ahead of the presidential election. Tech's mixed earnings season continues. Apple slipping after the bell on weak China sales, but Amazon and Intel gaining on bullish outlooks. And Boeing reaches a tentative deal with the union representing striking workers to end a dispute that's crippling aircraft production. Well, it's just gone 8 a.m. across the Emirates at 3 p.m. Friday afternoon here in Sydney. I'm Paul Allen, in for Jemana Pisecci. Let's take a look at how markets are tracking today. We are, of course, just hours away from getting US jobs numbers for the month of October. We're expecting to see some ongoing strength there, but of course we've had traders trimming bets recently on the prospect of Fed easing. So if we take a look at yields, they've been creeping up, 427.43 for the US 10-year at the moment. We've seen a slightly stronger yen, 152.45. That's had somewhat of an impact on Japanese equities. We'll take a closer look at that in a moment. Futures, though, for the S&P, for the Nasdaq as well, they're creeping up. Those disappointing results from Apple, we'll take a look at those in a moment. But Amazon and Intel having a bullish outlook, as we mentioned there. Take a look at oil as well. That's been rallying, and I'll tell you why. There's a report from Axios that Iran could be preparing to attack Israel from Iraqi territory in the coming days. This is according to two unnamed Israeli sources. Iran does have militias inside Iraq armed with drones and ballistic missiles, so a little bit of nervousness around the prospect of a re-escalation in the Middle East. Let's take a look at how markets in Asia are faring meanwhile. Avril Hong's in Singapore. Avril, what's moving?
Yeah, Paul, we're seeing that negative sentiment really hitting Japan equities, 2% down thereabouts on the Nikkei as dollar yen hovers still below the 153 level a day after BOJ Governor Ueda spoke of the currency impact and how it is majorly affecting the Japanese economy. So that essentially puts a December rate hike back on the table. Against that backdrop, China is showing that outperformance we did get this week. Today, in fact, the Tyson numbers, private survey of factory activity, showing unexpected expansion after the official print already did the same earlier in the week. So at least it looks like that growth momentum is coming or creeping back in. Chinese tech stocks are doing well today on the day where tech overall is the biggest drag on the Asia-Pacific benchmark. Paul.
All right, thanks very much, Avril Hong there in Singapore. Well, stocks were mixed in the US. As I mentioned, Apple was down. Amazon and Intel, they were up in after-hours trading. For more on what's been moving, let's get to our tech reporter, Annabelle Drulers. So, Belle, let's start with Apple and Amazon. What happened?
Yeah, well, just really different outlooks coming through for the holiday quarter. Of course, the fourth quarter of the year is a very serious or important one for companies that are looking to try and attract shoppers in that space. But Apple's outlook was a little bit of an undershoot on what expectations have been. So they're looking at total sales to rise somewhere in the mid to low single digits, and analysts have been looking for a 7% rise. The big concern as well was how they're going in China and how they're going against the local competition there, because there's the likes of Huawei, Xiaomi, Oppo. They've all got very competitive pitches in that premium segment for smartphones. And here as well, Apple sort of undershot expectations for the fourth quarter because they're seeing sales of $15 billion on the year, or a rise versus the estimates of $15.8 billion instead. So again, undershooting expectations. What's interesting actually is when you compare that to the holiday outlook from Amazon, because actually that was a lot more positive coming from the company, and they're actually seeing sales somewhere around the 14 to or 16 rather to $20 billion in the period versus estimates that had been for 17.5. So 20 billion at the top is definitely better than what some had been expecting on Wall Street. So a strong signal for Amazon coming through, also strong for AWS. And you again saw those two fortunes. So, I mean, Apple was under pressure in late trade. Amazon, though, up around 6%.
Yeah, maybe a bit of change in fortunes as well for Intel. Is there some hope that we might see a turnaround there?
Well, I'd say Pat Gelsinger, the CEO, is definitely hoping that way. I mean, we saw, yeah, you said that big share price jump. It was up as much as 12% at some points. And the question was sort of, is this actual investors really believing in the turnaround plan being carried out? or is this sort of more of a relief rally coming through from the stock, given we've just had successive quarters where it's done so badly? But broadly, the company did do better than expected. So the revenue is expected to be up to $14.3 billion for the fourth quarter. The estimate had been for $13.6 billion. And the company as well is saying that it's making progress in terms of its chips, the Gaudi 3. They're saying that they're seeing strong demand for that. And they're also more optimistic about the foundry business because they're trying to compete in that space as well. And they did sign some key customers in the period. AWS, for instance, is one of those. So, yes, definitely it does seem like the rebound or the restructuring of Intel could be starting to take some effect.
All right, tech reporter Annabelle Drull is there. Well, top US diplomats are in the Middle East trying to secure a pause in fighting before the US elections. Israel's considering a US-led proposal to stop the conflict in Lebanon and keep Hezbollah fighters away from the border. Now, this comes, as we mentioned, Axios reporting Iran could be preparing to attack Israel from Iraqi territory in the coming days. For more on this, let's get to Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia, joining us now. So how likely is it that the war in Lebanon could be over by the end of the year?
Good morning, Paul. I think it's at this stage very hard to say, and there are lots of details coming about exactly what's on the table. So how many days of ceasefire in return for how many prisoners, in return for how many hostages, because it's all bound up, remember, with the Gaza conflict as well. But I think it comes down to two fundamental issues. So on the Israeli side, the calculus has to be how exhausted the troops are. Remember, they've been fighting in Gaza for more than a year now. They went into Lebanon more recently, but that, again, has been rather hard going. And more importantly, you've got a change potentially of administration in the US, pretty much whichever way the election goes, and how does that factor into it? On the other side, you've got Iran effectively having to make a decision about whether it's going to push Hezbollah into some sort of ceasefire to preserve what is left of the forces that it has there, because at one stage it was one of the most powerful non-state actors in the world. And whatever the numbers, I think in reality, there is no doubt that it has been greatly degraded over the last several weeks.
So we have this report from Axios that Iran could use a proxy in Iraq to attack Israel. How should we interpret this?
I think there is no great surprise that the proxies both in Iraq and Syria and Lebanon and Gaza and Yemen have all been firing at Israel one way or another sporadically over the last year to varying degrees of intensity. So what would matter here is the scale of that attack if it comes. And if it is very large, then Israel may feel obliged to respond. And what will be interesting about that is, does it respond on the militias in Iraq directly, or does it go after Iran again? And I think that is fundamentally what the markets are waiting to see.
Well, let's talk about oil prices. They've been whipsawed this week. What is this telling us about market expectations?
So, I think going into the Israeli and Iranian tit-for-tat that you've seen over the last several weeks, the market had built in quite bullish expectations of what would happen to prices. As we saw that final response from Israel over the weekend, it sold off rather rapidly. But again, I think as we got into the middle of the week, the market sort of again came to the conclusion that whatever the outcome over the next several weeks, this is far from over. And none of those fundamental issues that have been driving the geopolitics of the Middle East are going to be resolved anytime soon. So you should anticipate more volatile prices going forward.
All right, Stuart Livingston-Wallace there, Bloomberg's executive editor for Middle East, North Africa and Russia. Thanks very much. Well, Spain is deploying 1,700 soldiers to assist in relief efforts and rescue victims trapped by storms that have killed more than 150 people in the country's east. The extreme rainfall triggered one of the country's worst natural disasters in living memory. The National Weather Agency says one town saw as much rain in 8 hours as it normally gets in a year. Still to come, we hear why Emirates MBD is heading into the fourth quarter slightly underweight and developed in emerging markets. We'll have more on their investment strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. BlackRock has received approval from Saudi to set up its regional headquarters in Riyadh. The move will help the world's largest asset manager expand its operations across the Middle East after establishing the BlackRock Saudi Arabia company 6 years ago. More than 500 firms, including Goldman Sachs, have set up their regional headquarters in Riyadh since the launch of the kingdom's program to diversify the economy. And staying in Saudi, a state-owned investment firm is closing in on a deal to take over the rest of Olam Agri at a valuation of about $4 billion. Bloomberg understands the Saudi agricultural and livestock investment company is in advanced talks, but no agreement has been reached. The possible acquisition of Olam Agri, which sells grains and seeds, could help strengthen food security in the kingdom. In a major breakthrough, New Zealand has secured trade agreements with 6 Gulf countries after 8 months of meetings and negotiations. The deal, which concluded in Doha overnight, will deliver duty-free access for 99% of New Zealand's exports over 10 years. It comes after the country secured a free trade agreement with the UAE in September. Well, investors pull back from US tech stocks on lackluster corporate earnings is extending into Asia, and that's weighing on the region's major markets. Let's bring in Anita Krishna Gupta, now Equity Strategy Head of the CIO office at Emirates NBD. Anita, thanks so much for joining us today. I just want to start in the US if I can, because we're going to have jobs numbers in a short while, likely to reflect ongoing resilience in the US economy. We're seeing traders trimming their bets on Fed rate cuts. I'm wondering if you have been reassessing your view on Fed easing.
Hi, good morning, everybody. What we are looking at Fed easing is we see another 225 basis point cuts this year. That's our in-house view. We don't think that's going to change based on just one bit of data. We've got a very exciting week ahead with a combination of the Fed with U.S. elections. The economy stays strong. We've got a advanced GDP US growth of 2.8% for Q3. So yes, you do have a strong economy, you do have strong job numbers. Will the Fed stop easing? Yes, a slower trajectory of easing, but no stop seen as of now.
We've also seen some fairly strong earnings out of the US as well. Most companies have been beating estimates. So how are valuations looking to you? Do you add to positions at these sorts of prices, or do you perhaps look to other markets in Asia?
We look at the S&P 500 with a fair value at 54.75. So it's trading a little bit above our fair value. Looking at valuation, it's about 21.7 times one-year forward earnings. That's above the 5-year average of 19.7. Valuations are a little worrying. We have seen a little bit of a pullback in technology in the last couple of days. So we think that markets will stay resilient because earnings are mixed. We have seen a number of the tech companies which have given a strong advanced guidance, whereas we have seen some fall. Any kind of even slightest disappointment is punished severely. So we think that the market should stay at these levels. A lot, of course, depends on any uncertainty around US elections. Otherwise, markets will continue to be driven by the fundamentals.
Yeah, let's talk about some of that uncertainty. First off, it depends on who you think is going to win. And regardless of that, both candidates have some big spending plans, which has implications for inflation. I'd be interested in your view on that. But also, there's a risk that we don't get a clear-cut result.
When we're looking at the effect on US corporates, either candidate, whether it is taxes or tariffs, both would add to inflation. If you're looking at, it's all probable right now. There is no certainty because end of the day, you've got to have both the houses clear any kind of policy. So whether we look at a possible candidate Harris, who could increase taxes from 21 to 28%, whether we look at President Trump, who could bring down taxes from 21 to 20% for US corporates and maybe to 15% for those who are producing domestically. And now the impact on US corporate profits would definitely be there, 4 to 5%. We're looking at possible increase in tariffs. There are some similarities which both the candidates have in terms of defense spend, in terms of tech exports to restricted areas and countries. Now the impact on inflation is all there because any kind of increase in costs to companies is usually passed on to the consumer. Hence, yes, we are not going to, differentiate between the two candidates at this point. Yes, as per market, there is a definite bias towards saying that if President Trump were to come back, inflation could be a little bit higher because of the 60% possible tariff on China imports. Because even if you do have tariffs on one country, you just shift the supply chain to possibly other countries.
Well, we've also heard some remarks from President Trump or former President Trump in New Mexico today, which really appear to be laying the groundwork for a contested election should he not be successful. Are you worried about the implications of that for markets, and are you hedging for that possible outcome?
Absolutely. So again, we said we are agnostic towards, the win between whether it's whichever candidate, whether it's Harris or Trump, the impact on markets, which continue to be fundamentally driven. Any uncertainty, if it's going to be 2 to 3 days, is what could cause the markets to tumble a little bit. Too early to predict or even say that what the impact on markets could possibly be, because if you look at past Republican or Democratic wins, it's been a mixed bag as to how the market does in the first few days or the first 90 days. So yes, uncertainty does create concerns. How would you hedge for that? We've already seen gold going up, but gold more a reaction to the fact that is it, a trade where people are looking at a weaker dollar going forward, or we're looking at rate cuts. So too early to say what that uncertainty could lead to in terms of market reaction.
I want to move on to something perhaps a little bit more certain, and we have, of course, heard from some big tech companies reporting today, but we're going to hear from some major oil stocks tomorrow in the US. What are your expectations around some of those energy companies, energy prices, particularly when you think about tensions in the Middle East and the uncertain demand picture in China?
Amazingly, oil prices have been fairly resilient, with Brent around the $70 to $73 handle recently. And if you're looking at supply and demand, and so far that is being met. We have seen, of course, the US increase production recently, again, under both administrations, whether it was President Trump or President Biden. So the US is fairly self-sufficient. Which is why we have not seen a big impact from geopolitics. What we are seeing is definitely the channels for oil supply. Those, if they are affected, would take oil prices up, and that then becomes a big concern globally. But at this moment, looking at China, the stimulus coming in, and there were worries about China demand for oil. So that's kind of now become a little bit more stable. So at the moment, it's status quo. We see our prediction, in-house estimate for Brent for 2025 is around $73, so currently around where it's trading.
All right, Anita, Krishna Gupta, Equity Strategy Head of the CIO Office at Emirates MBD. Thanks so much for joining us. Let's bring you an update on a story that we brought to you earlier. Olam has received a non-binding offer from the Saudi Agricultural Livestock Investment Company for its stake in Olam Agri-Business. So that non-binding offer coming in. So that's nearing a deal that might value that company at around about $4 billion. Still to come, our interview with Intel CEO Pat Gelsinger, as the chip maker gave a fourth quarter revenue forecast that was slightly above estimates. That interview coming up. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Intel CEO Pat Gelsinger says the company had a challenging third quarter, although it saw good operational results. He told us more about Intel's restructuring and the outlook for its AI accelerator.
We worked very hard this quarter to get this done. And the people actions, the restructuring charges, largely finished this quarter. So it was a challenging quarter that way. But to also deliver better than expected results if we eliminate those one-time charges, and to take our guidance up for Q4, I'm very proud of our team being able to do both of those this quarter. Some of the most difficult restructuring charges maybe in the history of Intel since our memory microprocessor decision almost 40 years ago. Getting that done and still beating results and taking the guide up. This was a very significant quarter for our team to execute.
Your AI accelerator did not get the traction that you'd hoped, and you won't be making the outline target of $500 million in sales for this fiscal year or calendar year. Why? Is it a use case issue that the data center operators aren't looking at it, or something else?
Yeah, two factors that we pointed out. One is that now we have Gaudi 3 coming out, so there's more enthusiasm for the next generation product that we're just starting to ramp now. The second one is the software. And the software use cases, the AI world has moved very rapidly and innovating very quickly. And the robustness and the completeness of the Gaudi software stack hasn't been as great. And it's an accelerator, not a full reprogrammable GPU. So that makes some of the software porting and optimizations a bit more difficult. Obviously, as we get more of that running on Gaudi, we solve the software problems. Okay. But secondly, then, it's also to move to a complete GPU capability, which we'll be doing out in time. And that development effort is also well underway. So we feel we have a solid position.
That's Intel CEO Pat Gelsinger speaking there with Bloomberg Technology co-anchor Ed Ludlow. All right, let's take a look at how some of the assets that we're tracking are trading at the moment. We've got equity futures for the US in positive territory at the moment. We're closing in on jobs numbers for the month of October. They're a few hours away. We're expecting to see ongoing resilience there. And we have, of course, had traders trimming their bets on the US economy. So S&P, NASDAQ futures in positive territory. And we had Pat Gelsinger there just talking about the good results from Intel. So we might see a pop there on Friday morning in the US as well. US bonds have been trading, well, somewhat skittishly. They've seen their biggest monthly loss in 2 years. Yields climbing as the election looms and all the uncertainty that brings. We've got the 10-year right now at 427.63. The 2-year spread there, it's not very wide at the moment, just 11 basis points. The oil price has also been moving. We've got Brent rallying. We've been bringing you news of that report from Axios based on two unnamed Israeli sources that Iran could be preparing to attack Israel from Iraqi territory in the coming days. Iran does have active militias in Iraq armed with drones and ballistic missiles. Still to come, sticking with oil, this week's Big Take is going to look at why oil is outpacing tech as the most productive US industry. We're going to have all the details of that up next. And by the way, we'd like to hear from all of our viewers, so we've put together a short online survey. You can scan the QR code that's on your screen right now, and you can tell us what you'd like to see more of on Horizons Middle East and Africa. This is Horizons Middle East and Africa. Our top stories this morning. Top US diplomats are in the Middle East trying to secure a pause in fighting just days ahead of the presidential election. Donald Trump claiming he's the clear frontrunner in the election race, while Kamala Harris goes on the attack over his views on women. And Boeing reaches a tentative deal with the union representing striking workers to end a dispute that's crippling aircraft production. Well, it's just gone 8:30 in the morning across the Emirates. It's 3:30 in the afternoon here in Sydney. I'm Paul Allen in Sydney, in for Jemima Beseche. Let's take a look at how markets are tracking at the moment. We've seen some interesting moves on bond markets. Well, the US Treasuries have actually had their worst monthly loss in 2 years. We've seen yields climbing. The yield on the 10-year right now, there on your screen, 427.63. The yen a little bit stronger today. The emphasis on the little bit, 152.49 on remarks from BOJ Governor Ueda yesterday. A rate hike in December starting to look increasingly likely out of Japan, so the yen a little bit stronger there. We've also got futures for the S&P and the Nasdaq pushing higher. Saw a fair bit of selling in US tech in the Thursday session. The Nasdaq off by 2 3/4%. Take a look at some of the other assets we're following, namely oil. We've seen Brent rallying in the last couple of days as well. We do have a report that we've been discussing today from Axios, based on 2 unnamed Israeli sources, that Iran could be preparing to attack Israel from Iraqi territory in the coming days. All right, against that backdrop, let's take a look at how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril, what are you watching?
Yeah, Paul, we're seeing it turning out to be a pretty bad day for equities in the region overall. You got US election uncertainties, tech earnings that haven't looked that great, but the pain is particularly bad in Japan. The Nikkei has lost the most since September, and this is a day after BOJ Governor Ueda spoke about the currency market's impact being massive or major on the economy. He also dialed back this cautious approach in terms of the uncertainties surrounding the U.S. economy, signals that he thinks they are diminishing. Inflation momentum in Japan also, he thinks, seem to be building. So all this, the investor reaction seems to be that December rate hike is on the table. We're seeing yields rising mostly in Japan. And as I say, when you talk about dollar yen as well and how it has risen, keep in mind that it was sitting below the 152 level after Ueda spoke. Let's flip the board and take a closer look at this chart, which shows you that it has actually broken past the overbought levels. The relative strength index moved away from 70. We're also seeing how it has actually moved closer to the 200-day moving average, so finding support in that sense. Paul.
All right, thanks very much, Avril Hong there in Singapore. Well, today's Bloomberg Big Take focuses on Wall Street, largely writing off the oil industry. But thanks to better efficiency, it's now the most productive US sector, outpacing even tech. The nation's crude output has risen to a record 13.3 million barrels a day. That's 48% more than Saudi Arabia's. Let's bring in Bloomberg's Dan Motar. He joins us now from Beijing. So Dan, tell us about some of these innovations that have been powering the oil industry in the US.
Yeah, the shale industry was famously famous for burning through cash, for wasting hundreds of billions of dollars in capital when it really started booming about a decade ago. And after a little while, Wall Street sort of, backed away and said, listen, we were, once bitten, twice shy. But in the past decade, what we've seen is every year these companies are out there drilling thousands of wells, and they're learning from their mistakes, they're learning from their successes, they're drilling longer wells. Laterals used to be, a mile, then 2 miles. Now they're as long as 4 miles long with a single rig. There have been some innovations such as Matador Natural Resources, which does a U-turn well where they drill it, about 2 miles long and then turn it around so that you can drill just one well and get 2 laterals. They're learning how to pump water more efficiently to reduce friction, and and they're basically out there every day shaving little bits of efficiency, and it's added up to an industry that's much more resilient than it was when shale really first started booming. So back a decade ago, it would take oil prices in the $70 to $80 a barrel range for a lot of these companies to make profit. That's been halved. Now most companies can make money off of $40 a barrel oil. And so what you're seeing is an industry that's in a much better position to continue to grow regardless of what OPEC does and what oil price fluctuations do.
And how has this changed the way that investors view their relationship with the US oil industry?
All you have to do is look at the stock price of ExxonMobil. We've seen a real return to value in these big companies, especially the majors who've bought out a lot of the smaller players in this. And what you see now is a restraint with capital. People aren't just going out and spending as much as they can to put a big production number up in hopes to get a sale and a big payday. Now these companies are investing in the long run, and so you're seeing multi-year plans for drilling, constrained capital. When oil prices get lower, they are able to slow down spending a little bit, and so you're having a much better return on capital than you had when basically companies were just going out and burning through money and just hoping that there would be another cheap credit in the next round.
Just quickly, Dan, some of those innovations you described sounded quite exotic. How much longer can US shale continue to eke out this sort of advantage, though? Can it continue to remain productive long term?
Yeah, this is a question that's been plaguing the industry since it began, and there have always been doubters who have said, there's just a certain amount of oil in the rock, and eventually that's going to run out. But what these companies have done is they've proven time and time again that if you can learn to do things a little bit more efficiently and shave a little bit of money off, you can do that extra little bit of work to get a little bit more oil out of that rock than you expected to, and that lets these oil plays like the Permian, like the Bakken, like the Eagle Ford, it lets them last a little bit longer than expected. So while we certainly think there's a certain amount of oil in the ground and eventually it's going to run out, I think it's a bad idea to be doubtful that it's going to go away sooner rather than later.
All right, Bloomberg's Dan Murtagh, thanks very much for joining us. Let's stick with the US because we're just a few days away now from the elections, and presidential candidates Kamala Harris and Donald Trump are in those western battleground states, and they're both ramping up their messaging to draw in any undecided voters and mobilise supporters to cast early ballots. Now, this is, as polls suggest, the contest remains incredibly tight. Joining us now is John Hart, professor at the Australian National University in Canberra. John, let's just get this out of the way right at the start. Are you willing to pick a winner based on either your analysis or just your gut feeling?
Absolutely not. I haven't a clue. If the polls are correct, the race is so tight that it is literally impossible to predict an outcome on the basis of the polling data. Nationally, generally the polls are showing Kamala Harris with a slight lead around 1%, but the race is even closer in the battleground states. There's no basis for predicting the result now. All you can do, I'm afraid, is wait until the results come in after Tuesday. And because it's so close, they might not come in for quite a while after Tuesday.
In terms of polling, in 2016 and 2020, the polls underestimated on both occasions the size of Donald Trump's support, the scale of it. Is there a risk that that support's being underestimated again?
There's a lot of problems with polling, and it's technical. It's largely based on the problem of not being able to reach key sectors of the population that they want to sample in their sample survey. The only thing you can say about the polls is that they are all pointing in the same direction. That is, they are all saying the race is very, very tight, tighter than it's been in living memory. And there is no basis in any of the polls for making any confident prediction about what will happen on Tuesday.
Well, we heard Donald Trump speaking in New Mexico today, and he was saying that the system's rigged. So in a way, he's already casting doubt on the result in advance. Should Kamala Harris win next week, how great is the risk that we might see civil unrest or a contested result?
I think almost certainly it'll be a contested result. There will be recounts, demands for recounts. There will be legal action in any one of the 7 or 8 battleground states if Trump loses. I think less likely if Kamala Harris loses. I think there's always the risk, given that what happened on January the 6th 4 years ago, I think there's always the risk that there will be some violence. But there are a number of things that are different this year. And I also think the United States government will be more prepared for demonstrations. But Trump won't be the incumbent president. Mike Pence won't be the incumbent vice president presiding over the vote count. It'll be, in fact, the existing vice president, Kamala Harris. So that would be different. But I think the authorities would probably be much more prepared for violence as a result of the election outcome.
What's your view of the campaign been so far? Because the Trump style of campaigning is, of course, very well known. This is the third time that we've seen it. How effective do you think the Harris campaign has been in countering that? So should they have done anything different?
Well, Harris was very successful, not only in closing the lead that Trump had on Biden before Biden dropped out the race, but on increasing that lead thereafter. For much of September, October, she's had something like, on average, a 2% lead in the national polls, although that doesn't tell you much about what's going to happen in the battleground states. Clearly, over the last 10 days, that lead has been shrinking a little bit. But as I said, the poll data is indicating such a close race. It's well within the normal margin of error of polling. I think Kamala Harris has done pretty well, but perhaps not well enough to make people confident that she will be the victor on Tuesday. Trump, of course, has never had a majority win in an American presidential election. Indeed, he's in a way never won an American presidential election, because in 2016, he was the beneficiary of a quirk in the Electoral College system where he was the runner-up in the popular vote, but won in the Electoral College. And of course, the same thing can happen this year. It can happen anytime the popular vote is close between two candidates. I think there's quite a risk that Kamala Harris might edge out Trump in the popular vote, but Trump will be the beneficiary of the biases in the Electoral College, the quirky system of counting the votes, and he could well end up as another runner-up president, which would be the third in the 21st century.
Yeah, the Electoral College, just one of the peculiarities of the US democracy. It is quite unique in a number of ways, and obviously former President Trump is unhappy with the way it functions. There's questions around voter ID, postal votes, the way those are handled. The voter turnout's always really low, and elections are held on a Tuesday, which is extremely weird. Do you think there's any hope of electoral reform in the US, considering the polarization in the country?
Not to the Electoral College, for two reasons. It's really difficult to amend the Constitution. And any change in the Electoral College, and the change that most people would be talking about, and indeed the change that's supported by a majority of the American population, is abolition of the Electoral College and the introduction of a direct popular vote. But that would mean a constitutional amendment. And the constitutional amending process favors minorities, not majorities. It is almost impossible, given the polarization between the two political parties in the United States, that there would be a sufficiently large majority to abolish the Electoral College. I think chances for reform are pretty negligible.
All right, John Hart, Professor at Australian National University in Canberra. Thank you so much for joining us. Still to come, Boeing and union leaders reach a tentative agreement to end the labour dispute that's crippled aircraft production. We'll bring you the details of that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Boeing shares jumped in late trade as the union representing 33,000 striking workers reached a tentative agreement to end their dispute. The deal would boost wages by 38% over 4 years and give workers a $12,000 signing bonus. Bloomberg's transport reporter Danny Lee joins us now. So, Danny, fourth time's the charm. What's the deal on offer this time, and what are the chances it's going to get voted through?
The effective pay rise here we're looking at is 43%, which is more than what the workers, the union, was looking for when they originally went on strike. So with a narrowly defeated vote the previous round, this feels like it's not going to take much for incremental improvements, particularly as the union were not going to get fundamental changes on pensions that they have been demanding. So given this strike has now gone on long enough, over 7 weeks, clearly there's been waning support. And the union, the IAM, have warned that if there is no resolution in this vote, which will take place on Monday, on November 4th, this is the best you're probably going to get. And obviously, as we loom towards a presidential election, potentially a change of administration, different positions could be taken. And so therefore, for the union, for the workers, this is it, basically.
So what's at stake here for Boeing and for workers, whichever way this vote goes?
Yeah, I mean, Boeing's just come off the $21 billion fundraise in order to shore up its balance sheet. The risk for them is further disruption, the fact that it cannot produce the planes. There is the risk still of a ratings downgrade, but that has been lessened given the amount of money it has been able to raise. But even for workers, just the fact that they would potentially prolong this strike and potentially sow deeper divisions within the union. So the chances are still high that this could go through. So we'll just have to wait and see until we get the results on Tuesday in Asia hours.
All right, Bloomberg's transport reporter Danny Lee there. Thank you. Coming up, the IMF lowers its economic growth projections for the Middle East and North Africa. We dig deeper into what's behind those lowered expectations next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. The IMF has lowered its economic growth projections for the Middle East and North Africa, citing conflicts, geopolitical uncertainty and oil output cuts. Growth for 2024 expected to be 2.1%. Now, that's a decline from its April estimate of a 2.7% expansion. For more, Paul Wallace joins us now from Dubai. Paul leads our Middle East, North Africa economy and government coverage. So, Paul, how worried is the IMF about all these conflicts in Gaza, Lebanon and the Sudan as well?
Hi, Paul. It definitely is concerning. I think that's a big part of that that sort of 60 basis point downgrade for the growth forecast for this year. This war, the one that started when Hamas attacked Israel in October last year, now has spread from Gaza to Lebanon, to the Red Sea, of course, and the Houthis in Yemen, and also has led to direct Iran-Israel attacks, is really hitting the region in quite a substantial way. And it's affecting many economies. Egypt is one of them. In fact, Egypt is trying or is looking with the IMF to revise the terms of an $8 billion loan program. It signed with the IMF only in March, and it's doing that because it's talking about the unprecedented strains it's facing because of the conflict and the impact it's having on things like tourism and Suez Canal revenue because of the Houthi attacks stopping many ships from going through there. So it is a big concern for the IMF. Without a doubt, particularly for what it calls mid or lower income countries. So not so much the Gulf oil exporters, the Saudi Arabias and the UAEs of this world, they're doing okay. But when you look at the likes of Egypt, Jordan, other countries around there for sure. Obviously Lebanon as well, although that's a different case given the conflict between Hezbollah and Israel.
Well, let's talk a little bit about Saudi Arabia releasing third quarter GDP numbers. Its economy grew for the first time since early 2023. How much does that tell you about its future outlook?
Well, I think it's certainly a relief for the Saudi government that that economy is back into growth. The $1.1 trillion economy is the biggest in the Middle East. The 4 quarters of negative growth or contraction that it saw were down to it and other OPEC members lowering oil production. Essentially, when Saudi Arabia cuts oil production in a big way, that really has an impact on GDP numbers, given the centrality of oil still to its economy. So I think Saudi Arabia will be happy that it's back to growth. The non-oil economy, and this is something that Crown Prince Mohammed bin Salman, MBS, is very much looking at because he's trying to diversify the economy. It's still growing above 4%, so that is positive for the government. But I have to say the oil revenues and oil prices are a bit of a concern for them. Oil is trading far below what Saudi Arabia needs to balance its budget. It needs roughly $100 a barrel to do that, and we're down into the low 70s. So that it's back to growth is good, but there's certainly concerns for Saudi Arabia about the outlook for oil prices.
All right, Paul, thanks very much. Paul Wallace leads Middle East, North Africa economy and government coverage. Okay, let's take a look at equity futures for the US. It was a pretty nasty session on Thursday. We saw the Nasdaq losing 2 3/4%, but it looks like we're setting up for a brighter start this Friday. Nasdaq futures better by about 1/4%. S&P futures in modestly positive territory as well. And as we look ahead to the open in Europe, well, it's kind of flat there at the moment. But we've seen treasuries having a bit of a wild ride. US bonds saw their biggest monthly loss in 2 years. Yields just creeping up there. Of course, we are waiting on US October jobs numbers. We'll get those in a little bit under 8 hours' time. We're about 8 hours away, expecting to show some ongoing strength for the US economy. So traders really have been trimming their bets on Fed easing. Take a look at the oil price. We have been talking about that Axios report that Israel may face another attack from Iran. So Brent crude prices creeping up again. That is Horizons Middle East and Africa. I'm Paul Allen.
This is Horizons Middle East and Africa, our top stories this morning. Tech's mixed earnings season continues. Apple slipping after the bell on weak China sales, but Amazon and Intel gaining on bullish outlooks. Scandals mount at Nomura, Japan's biggest brokerage, threatening to derail a turnaround plan and overshadow today's earnings. Plus, top U.S. diplomats are in the Middle East trying to secure a pause in fighting just days ahead of the U.S. presidential election. Our priority feature today looks into the situation in the West Bank. Good morning. It is just gone 9 a.m. across the Emirates. It's 7 a.m. here in South Africa. I'm Jennifer Zapasaja in Johannesburg. Welcome to the second hour of Horizons Middle East and Africa. Welcome to Friday. Welcome to November. There's a lot happening. Let's just take a look at where markets are positioned. As you can see, U.S. equities tilting to a higher open, potentially later on when markets open today. If we take a look at NASDAQ futures, let's just start there, up about 0.3%. And that was coming even as we saw a little bit of downside earlier this week because of those disappointing earnings that we got from Microsoft. But then on Thursday, we also got Amazon and Intel bucking the trend after hours, potentially helping lift up that index. We also have S&P futures tilting upwards there about 0.25%, or about 0.2%, excuse me, right there. We're also paying close attention to Brent crude. Oil right now extending its gains, as you can see, up just about 1.92%. And that is coming after we got a report from Axios saying that Iran is planning a major retaliatory retaliatory strike on Israel through the militias it backs in Iraq. So Brent crude right now at $74.21 a handle. And if we take a look at the 10-year yield, we've been paying close attention to that over the past few weeks. Right now, it is paring its losses at 427.63. But that coming even after Thursday, we did see it top 4.3%. We also have a jobs report coming later today, potentially affecting that. And let's just take a look at this chart when we talk about that jobs report, because the expectation is potentially we will see about 100,000 jobs that were added in the month of October. And a lot of the downside potentially, or the impact to the jobs print, is going to be coming from those hurricanes that we did see, and also the strikes that we got. So this is a look at what the expectation is, and this is, of course, the last jobs print that we'll get before the U.S. election. Let's pivot, though, to markets in Asia and see how they're faring. It's been busy, of course, all week for Avril Hong. She's standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, it's been pretty busy for you as well. But today, we're seeing how Asia stocks have started the month of November on the back foot, extending the monthly decline of about 4.6% on the region's benchmark, save for when you're looking at Chinese equities. And this is a day where investors are, turning a bit cautious given the U.S. election uncertainties. We're looking ahead to U.S. jobs data. The U.S. tech earnings this week haven't been much help either. The pain particularly bad on Japan's Nikkei, falling by the most since late September. And if you take a look at this chart, it will show you the relationship between the Japanese currency and stock market performance. And given how traders are kind of bracing for a rate hike from the BOJ in the next couple of months, the relationship, or the bias, I should say, for the Japanese yen is one of strength. The chart is courtesy of MLive's Mary Nicola, and it also shows you how it doesn't bode well for the Japanese stock market performance, given what we are expecting on the yen. Keep in mind as well that even though we're in the early days for the reporting season in Japan, that about half of the companies that have reported so far have been disappointing. So it's about the yen as much as it is about earnings. Jen.
Thanks so much, Avril Hong in Singapore for us there. Let's stick with the tech story. Stocks were mixed in the U.S. with Apple down, but Amazon and Intel up in after-hours trading. For more, let's bring in our tech reporter, Annabelle Drulers, who has been following this closely for us. So, Annabelle, let's just start with Apple and Amazon. It's been a busy week for the Mag 7. What happened with these two?
Yeah, well, if you were to sort of look at what stood out as the common theme between them, it was sort of different outlooks for the holiday period, because on the one hand, you had Apple sort of saying that growth in the fourth quarter was going to be in the low to middle single digits, when analysts had been expecting around 7%. And also in the current period, they had weaker sales going into China. So that was not such a great outlook from the company, and that's why you saw that stock there slipping in late trade. Really concerns in particular around the mainland market in China, and how they're sort of managing to fend off or what they're not doing to try and capture consumers there who also have a big choice from local brands like Huawei or Xiaomi or Oppo. So that was sort of the Apple story. And then, of course, just returning to Amazon here, they actually had projections for the fourth quarter that exceeded estimates, essentially. So they're looking for sales of up to $20 billion in the period. The estimate had been for $17.5 billion as well. So certainly a lot of optimism coming in around the holiday shopping season.
And interesting, Annabelle, with Intel, we don't always get optimism when it comes to Intel, or we haven't over the past few years. I mean, talk to us about what we got from the company.
Yeah, that's right. I mean, it's certainly been a very tough few quarters or even longer years for the business. It was really once one of the biggest chip companies in the world and has been really whittled down. But the turnaround plan or strategy from CEO Pat Gelsinger is very well understood, and he's been executing on that for the past couple of quarters. And now perhaps we're starting to see some actual dividends coming through, because actually when the fourth quarter revenue forecast came through, it was a little bit higher than what analysts had been expecting. So they're looking at revenue of up to $14.3 billion. Analysts have been seeing somewhere like $13.6 billion, and also projections of profit per share. That was double what analysts had been expecting. So that's sort of sparking some optimism. Maybe Intel can start to regain some of its market share that it's lost. So we saw that stock rising sharply, up as much as 12% in late trade. But again, some people also just pouring a little bit of caution on it. It doesn't mean that the turnaround has worked or even that the worst is over. It's just perhaps a sort of relief rally that maybe we didn't see such negativity that's been really the hallmark of the previous earnings reports?
It's been a fascinating earnings season to watch these Mag 7. Tech reporter Annabelle Drewlers, thanks so much for staying on top of it for us. Let's pivot to this other story. Scandals are mounting at Nomura, threatening to derail a turnaround plan at Japan's biggest brokerage. Senior managers will take a pay cut after admitting an employee manipulated the bond market. And now a local news agency says a former worker's been arrested on suspicion of robbery, attempted murder, and arson. Asia investing editor Russell Ward joins us now in Tokyo. Russell, thank you so much for joining us. So Nomura is reporting earnings later today, but that's really being swamped by a lot of this news that we've just gotten. Can you just walk us through it?
Absolutely, Jennifer. Normally this would be just a routine earnings day, but unfortunately the routine procession has been overshadowed by these scandals. About a month ago, revelations came out from the securities watchdog and Nomura had later admitted that an employee had been manipulating the bond market here in Tokyo. But then just yesterday, the bank announced pay cuts to sort of put a line under that scandal. And then within minutes of that, local media reported this incident in Hiroshima where a Nomura employee, now a former employee, went to the home of some elderly clients and drugged them and robbed them of some money, about $171,000 worth of money, and then set the place on fire. So that person's been arrested. This is all according to the Kyoto News Agency. And so really this is just a fresh scandal that has come on top of the previous market manipulation scandal right at the worst time, right on the eve of earnings. So we can expect Nomura to face questions about that at the earnings when they hit less than an hour away.
Well, Russell, just give us a sense of what the expectation then potentially is for earnings. Of course, this will be a look back at what's been happening with the company, but what is your expectation?
Yeah, actually, the earnings are supposed to be quite positive. Analysts are expecting profit to have risen 79% from a year earlier. So that would be the third straight quarter of profit growth. That's the longest streak of profit growth under the current Chief Executive Officer, Kentaro Okuda. So, that's good news for him. But really, I think looking forward, the question is over how much, firstly, the bond market manipulation scandal has affected their business. We know that it has prompted clients who trade with Nomura to take their business elsewhere, and also bond issuers to take their business elsewhere. So definitely it's going to take some sort of a hit in the current quarter. Normally when this sort of thing happens here in Tokyo, the clients eventually return, so it's probably not going to be a long-term hit. The other question is really sort of a bit of an unknown one, is to what extent this, the former employees' alleged acts in Hiroshima hurt the reputation of Nomura, given that a lot of its business is dealing with retail clients, doing this face-to-face door business, and so really that is sort of an unknown that we'll have to see what happens there.
Fascinating story. Asia investing editor Russell Ward joining us in Tokyo. Russell, thanks so much for joining us and giving us that reporting there. Now, still ahead, we speak with the UK Business and Trade Secretary, Jonathon Reynolds, about Labour's first budget and establishing a new growth partnership with the UAE. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. UK Chancellor Rachel Reeves sought to reassure the financial markets after her budget triggered a sell-off in UK bonds. She told Bloomberg that the Labour government's top priority is economic and fiscal stability.
We have more headroom than the previous government left us, and that is important to guard against those sorts of shocks. But we, in the budget yesterday, were open and honest about the scale of the challenge left to us by the previous government, but we have now put our public finances on a stable and a solid trajectory.
Now, among the measures announced by Reeves in her budget, an increase in the minimum wage and higher tax on employers known as national insurance. For more on what this means for businesses, let's bring in Jonathon, Reynolds, UK Business and Trade Secretary, who is joining us in our Dubai studio. So, Jonathon, thanks so much for joining us. So, a lot of reaction to this budget that we got earlier this week. Rachel Reeves' budget is being criticized for potentially squeezing a lot of these middle income, this middle class, and a lot of smaller businesses. I mean, what is your reaction to that?
Well, the budget yesterday by my colleague Rachel Reeves was fundamentally about fixing the foundations in the UK, putting the UK on a trajectory of longer-term, stronger growth, particularly when it comes to the need for much greater public investment in infrastructure to remain globally competitive. I would strongly push back on any suggestion that the burdens on business are overdue. Specifically in relation to your question about smaller businesses, they were shielded from that national insurance charge by a change in what is called employment allowance within the UK. But it's true to say there was a more challenging fiscal inheritance for the new government than we would have wanted. But I think the changes the Chancellor brought in were fair, they were proportionate. They fundamentally provide for long-term stability, the foundations being fixed, and a trajectory for the UK which sees the stronger growth, which we believe is integral to our offer to the world and our offer to investors, and fundamentally about making sure we've got the prosperity there to deliver the public services and living standards that people want to see.
Could the increase, though, in the minimum wage potentially lead some of these mid-sized businesses, though, to have to cut their staff or even drop their wages? I think that is a lot of the criticism that's existing here.
Well, there will always be, where you have any kind of pressure on business, of course, that will ultimately be something which affects how that business operates, what they can then do in terms of recruitment and pay. We accept that. But fundamentally, where we had got to in the UK was a position where, to be frank, the official watchdog within the UK, the Office of Budget Responsibility, has had to come out and say the previous budget under the previous government was not accurate in terms of the information provided by government. So a very challenging position to be in for a new government. But I would again say, if you look at the overall tax position within the UK, if you benchmark some of those changes that we've had to introduce, there is no doubt the UK is still a globally competitive market when it comes to tax competition. Many of our competitors don't even have the kind of threshold on national insurance contributions, which, yes, we've had to lower with the changes in the budget, but it's within a context of, when you benchmark those, whether it's national insurance or capital gains tax, still a very attractive tax position in the UK. And of course, when it comes to corporation tax, the certainty we provide around corporation tax, commitment to allowances, actually 9 out of 10 businesses in the UK will actually pay a lower effective rate of corporation tax than the 25% that we have. I think it's, again, a competitive position when people look at the detail.
Jonathon, let's pivot to why you're actually in the region in Dubai there. This is your second trip now to the Gulf since Labour came into power just a few months ago. I mean, what does this say about the UK's relationship with the region, with the UAE? What is it you're trying to establish?
Well, I think it speaks for itself in terms of how much of a priority this is for us. My second visit, as you say, but actually every member of the Gulf Cooperation Council has been visited by a minister in the new government, and that's because we see a real opportunity here, a real partnership that it's very strong, but that we can build on. A bilateral trade between the UK and the countries of the GCC, nearly at £60 billion sterling, potential for our FTA, our free trade agreement negotiations, to substantially improve upon that. So the chance to again be here to address my fellow trade ministers at the Gulf Cooperation Council trade ministers meeting yesterday. A real honour, to be frank, to be invited. But I am really excited by this relationship for the future, for what it means. And of course, particularly here in the UAE, a very strong relationship with the UK and some specific things to be able to visit and build upon here whilst I'm spending the day here.
What's the goal then, Jonathon, in the short term? You said there is an opportunity for it to substantially improve. I mean, what is it that you are targeting?
Well, the free trade agreement, which we are seeking to negotiate with the GCC, one of our priorities in the Labour manifesto, the scale of the commitment, I think, quite clear. It's fundamentally about making it easier to do business between our two jurisdictions. So some of those free trade agreements, often they focus on tariffs and goods market access. That's a key part of it for areas like cereals and ceramics. There are real improvements, I think, that could be made for British products coming into the GCC. I think, obviously, for an economy like the UK, you will understand that services access is a key part of what we're seeking from free trade agreements. There are fundamentally ways we can improve on how easy it is to do business, and on how easy it is to do the kind of transactions which we have a good track history of here in the Gulf, but which we believe we can do more of in future. And fundamentally, you've got two economies which are incredibly complementary. They go together in a way which a free trade agreement can unlock even further opportunities and prosperity for the future. So these things aren't easy, but the prize is real. Huge amount of Gulf activity in the UK, huge amount of UK activity in the Gulf. If we can build on that for the future, what a positive story at a time when too much of the world is retreating into isolationism and protectionism.
Yeah, and just on that, Jonathon, I mean, is there the potential for geopolitics to potentially get in the way of that? We saw a recent row with the Transport Secretary and the UAE causing some friction. I mean, is there potential for other things to derail this partnership from strengthening?
Well, look, this is a strong relationship, and there'll always be a need for dialogue on certain issues. We don't conduct explicit foreign policy questions through our trade negotiations, but I would say this is about more than just a strong commercial relationship. I believe trade is a force for good in the world. It's something that brings places together, brings communities globally together. We should be seeking a world with stronger trading relationships and always be seeking to open those up wherever is possible. And I think one of the big changes that the change of government in the UK has brought is not just a return to political stability in the UK, but a return to a country explicitly open towards the world, whether that's rebuilding the relationship with the EU or seeking relationships around the world, like I'm doing with this visit to the Gulf. So, yes, we should focus on the commercial opportunities. We should never dodge difficult questions if they need to be had through proper dialogue and understanding. But we should also be making the case that bringing economies around the world together is in itself a good thing, and we should always be trying to do more of it. That's what this new government is committed to, and what I'm personally committed to as the new business secretary.
All right, great to get you on. Jonathon Reynolds there in our Dubai studio, the UK Business and Trade Secretary. Thank you so much for your time this morning. Now, coming up, as the U.S. engages Israel in ceasefire talks, we look into the restrictions in the West Bank that could complicate the path to a Palestinian state. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Top U.S. diplomats are in the Middle East trying to secure a pause in fighting before the U.S. elections. That's as the conflict continues in Lebanon and Gaza, and as Israel targets Hezbollah and Hamas, respectively. At the same time, Israel has beefed up security in the West Bank, placing restrictions on Palestinians that put the possibility of a statehood further out of reach. For more on this, Bloomberg's Fadwa Hadali is joining us now from Bethlehem. She is also one of the authors of the story now available on Bloomberg. Fadwa, wonderful to get you on. So can you just describe the significant escalation in the movement restrictions that we've been seeing and that you witnessed yourself?
Yes, good morning. Of course, the situation after October 7 has changed in the West Bank. Severe restrictions on movement. We have over 90 new obstacles being imposed on the West Bank, from checkpoints, permanent, increased surveillance, raids, violence, settler violence. So this is all affecting the daily lives of Palestinians. So moving from one Palestinian city to the other, from one village to the other, that used to take short time, now it's taking longer time. For example, I live in Bethlehem. If I want to move from Bethlehem to Ramallah, usually it used to take me an hour to get there. Now it takes you close to 2.5 hours to get there because of the Israeli measurements on roads, checkpoints, random checkpoints, permanent checkpoints. You have to take different routes to move around. So this is impacting all aspects of lives for Palestinians in the West Bank after October 7. And having these restrictions, the movement restriction is a very severe, this is the most severe restriction that you can impose on Palestinians moving around.
Right. So Fadwa, how does this then complicate the vision for a two-state solution?
Well, you can imagine a Palestinian Authority that's trying to bring in peace and stability and a state to the Palestinians. It's being hindered. All these raids, all these obstacles, the current Israeli government has no interest in dealing with the Palestinian Authority and trying to undermining. And despite all that, the Palestinian Authority is doing everything possible. All sectors is being affected by this. Unemployment on the rise, the closure of checkpoints and movement. These are affecting over 500,000 Palestinians used to work inside the Israeli territories are no longer able to work inside Israel. So you can imagine the economic stress that this is being imposed on the Palestinian Authority. The tax also that's being imposed on the Palestinian Authority.
Sorry, Fadwa. We have to leave it there. Hopefully everyone can read your story. Bloomberg's Fadwa Hadali. Thanks so much for your time. We have Africa Amplified coming up. Stick with us.